Beyond the use of deductible and coinsurance, medical expense indemnity policies are unable to control healthcare costs. This led to the creation of managed care and managed care plans. Health maintenance organizations. A health maintenance organization, HMO, is a corporation that delivers healthcare services on a prepaid basis, financed by premiums paid by those who enroll in the HMO. The HMO creates a network of doctors, medical care staffs, hospitals, and clinics. This network treats enrolled members and their families. HMOs operate within geographic areas known as service areas. They are regulated by the states in which they operate. In some states, HMOs are called health insurance corporations or health insuring corporations, HICs. HMOs must be certified in every state where they operate. HMOs make a contractual payment arrangement with each participating healthcare provider. Through capitation, the arrangement pays the HMO provider a set amount for each enrolled person assigned to it, per period, whether or not that person seeks care. Individuals apply to become members or participants in the HMO. Then they pay premiums to the HMO every month, quarter, half year, or year. The HMO is responsible for the availability, accessibility, quality, and cost of the healthcare it delivers. Healthcare providers and staff who operate within an HMO are employees of the HMO. To receive covered care, HMO members must use the HMO's network of providers. With certain exceptions, care that an HMO member receives from providers outside the network is not covered. This is a disadvantage to members, whose choice of providers is limited to those in the network if they want covered care. Closed panel versus open panel. An HMO that does not provide covered services outside its network is a closed panel HMO. Some HMOs have an open panel network that covers services from providers whose fees have been set in agreement with the HMO. These are point of service, or POS, plans. Preventive care services. Like indemnity insurance policies, HMOs cover medical care services, including surgical and hospital services, to help members recover from illness or injury. Unlike indemnity policies, HMOs emphasize and cover preventive care to avoid more costly care required to treat an illness. HMO preventive care programs try to detect diseases early and promote healthy lifestyles among members. By offering free annual physicals and diagnostic tests, HMOs promote good health. They also provide preventive care services, such as supplemental dental and vision care, well baby care, adult and child immunizations, family planning services, treatment for infertility. Some HMOs may focus exclusively on dental care or vision care, serving individuals and groups. Primary care physician. HMOs require members to use their plan's network of doctors and hospitals to get covered services. A primary care physician, PCP, controls members' access to medical specialists in the network. This PCP is also one of the network physicians. New members select their PCP when they enroll in the HMO. The PCP coordinates members' healthcare treatment. For that reason, the PCP is sometimes called a gatekeeper. By controlling members' access to specialists, HMOs manage healthcare utilization and reduce healthcare costs. HMO emergency and hospital care. To manage costs, HMOs review requests for non-emergency surgical procedures. The HMO must approve hospital stays and surgeries before they occur if it is to cover the cost. However, in the case of an emergency, prior approval may not be possible. Furthermore, the member may be outside the HMO's service area. In these cases, the member must notify the HMO within a specific time following treatment, such as within 24 or 48 hours. Deductibles, coinsurance, and claim forms not required. Major medical insurance policies try to control costs through deductibles and coinsurance. In contrast, HMOs impose no deductibles for any health care provided in their network. The reason for this is that HMO services, like all managed care plan services, are considered prepaid by the members' premiums. Nevertheless, HMOs usually require a modest copayment from the member, copay, for each doctor visit or health service, such as $15 or $30. Key point. There is an important difference between coinsurance and copayment. The term coinsurance is associated with major medical insurance. It is a percentage of the total charges that the insured pays. The term copayment is associated with managed care plans. It is a flat dollar amount that the member pays. A member does not need to submit forms to make a claim for covered services provided within the HMO network. The member simply makes the required copayment at the time of service. The member may need to submit claim forms when receiving emergency treatment from a non-HMO provider outside the HMO service area. Preferred provider organizations. Like HMOs, preferred provider organizations, PPOs, also coordinate the delivery and financing of medical care, but in a different way. Often sponsored by commercial insurance companies, a PPO is a managed care health plan that contracts with a network of preferred providers that the member may use for medical care. The PPO does not employ these providers. This differs from an HMO, which employs its providers. PPOs offer medical services at negotiated, reduced fees to the sponsoring organization's members or employees. In return for offering these services at reduced prices, the healthcare providers receive a greater number of potential patients. Prompt and assured payment. Physicians, hospitals, and clinics are some healthcare providers that may join a PPO. Providers who join a PPO must accept the PPO's previously negotiated fee as full payment for services. Unlike HMOs, a PPO does not require members to use a primary care physician, PCP, nor does it require members to get a referral to visit a specialist. Like an HMO, a PPO requires members to pay a copayment for services received in the network of preferred providers. Unlike an HMO, a PPO allows members to get care from outside the network, referred to as going out of network. However, doing so may incur a deductible. Point of service plans. The point of service, POS, plan combines characteristics of an HMO and a PPO. The PPO is the insurance industry's response to the HMO concept. The POS plan is the HMO industry's response to members' desire for the freedom of choice in providers offered by traditional medical insurance policies. A POS plan appeals to consumers who want the convenience of an HMO and the freedom to choose providers from outside the network. As with an HMO, members of a POS plan select a primary care physician, PCP, who becomes their primary contact for medical care. Like a PPO, members of the POS plan may get care outside the network of providers, but doing so will incur a deductible and coinsurance payment. Exclusive Provider Organization. The Exclusive Provider Organization, EPO, is an extreme form of a PPO. While a PPO will cover medical expenses provided outside the network, at a lower reimbursement, EPOs will only cover medical expenses when the provider is in the network. Expenses incurred outside of the network are not covered. The reward for this restriction is the member's costs. EPO plans are less expensive than either HMOs or PPOs. Blue Cross/Blue Shield plans. The roots of managed care are Blue Cross and Blue Shield, BC/BS, plans. These were the first of the prepaid managed care health plans established for members or subscribers. Blue Cross covers hospital care. Blue Shield covers medical and surgical care. Blue Cross and Blue Shield offer basic, major, and comprehensive medical plans as well as HMO plans. These organizations also administer Medicare programs for the federal government in many states. They are common providers for group health insurance plans. Contracts with insureds and providers. BC/BS plans are administered by a network of independent commercial and fraternal medical insurance companies. Each company serves a single state or a group of states. These companies are linked under the National BC/BS Trade Association. BC/BS members pay a monthly fee for a broad range of services. The BC/BS insurer pays the provider directly, so members do not submit claim forms. BC/BS plans establish the use of health risk pools and the practice of community rating to set premiums. Under community rating, an insured group in a geographical area is charged the same rate. Each member pays the same premium in advance for medical care without regard to health status, age, or sex. A health risk pool, administered by the state, enables people with low incomes or who cannot get coverage through the individual health insurance market to get basic medical insurance coverage. BC/BS plans provide coverage for these pools. Cost containment in healthcare delivery. The cost of healthcare in the United States concerns insurers, policymakers, and consumers. Managed healthcare plans such as BC/BS, HMOs, and PPOs help to address the cost. For instance, they use systems that control how healthcare is applied, used, and delivered. They also ensure the quality and effectiveness of healthcare. Insurers consider the usual, customary, and reasonable, UCR, charges for medical services in a geographic area when determining benefits. Services cost more in urban areas than they do in rural areas, and the UCR approach accommodates this difference. Preventive care, negotiated rates, pre-authorization, prior approval. Managed care plans try to control costs and ensure quality health care by limiting access to healthcare providers, coordinating patient health care, requiring patients to get approval for healthcare services before receiving them, emphasizing preventive care, negotiating reduced fees with healthcare providers, emphasizing outpatient care, limiting use of claim forms. Managed care plans also perform utilization reviews. These reviews assess the need for and appropriateness of healthcare services for members or subscribers. They help control overutilization, reduce costs, and manage healthcare services. Reviews also help develop standards by which managed care providers cover treatment. Managed care providers often refuse to reimburse or pay for services that do not meet their standards. The review can take place before, during, or after a medical service is provided. In other words, utilization review may be prospective, current, or retrospective. For your review. A health maintenance organization, HMO, delivers healthcare services on a prepaid basis, funded by members' premiums. HMOs require a copayment, copay, from a member for each doctor visit or health service. A PPO is a managed care health plan that contracts with a network of preferred providers that the member may use for medical care. Unlike an HMO, a PPO lets members get care outside the network, though doing so incurs a deductible. A POS plan combines characteristics of an HMO and a PPO. The POS is the HMO industry's response to members' desire to select their health care providers. BC/BS plans establish the use of risk pools and the practice of community rating to set premiums. Under community rating, an entire insured group in a given area is charged the same rate. A health risk pool, administered by the state, makes it possible for low-income persons or those who cannot get coverage through the individual health insurance market to get basic medical insurance coverage. A utilization review assesses the need for and appropriateness of healthcare services for members or subscribers. Utilization reviews may be prospective, current, or retrospective with respect to healthcare services or treatment. Please pause the audio and watch the video. You can restart the audio playback at any time.
What started out in the 1970s as a novel way of covering the cost of medical care has become the standard model towards which most types of medical care are probably heading today, and that's managed health care. A managed care plan is one that combines medical care with the financial protection offered by medical insurance. In preparing for your health insurance exam, make sure you can differentiate between the various types of managed care plans. And let's begin with the original type, the Health Maintenance Organization, or HMO. An HMO is a type of a business entity. In fact, it is technically called a Health Insurance Corporation, or HIC. The original HMO concept truly combined medical care delivery and insurance coverage in a single program. Premiums are actually considered prepayment of medical care to be received. And in fact, there's a term that you want to make sure you understand for your exam, and that's called capitation. Capitation is the basic format that HMOs use to compensate doctors, labs, and other participants in the HMO for their services. Capitation basically is a per insured fee paid by the HMO to the provider, whether or not there's actual care administered to the member. And then finally, HMOs truly are the beginning of what we call managed care. A characteristic feature of an HMO is the primary care physician, or PCP. This is the doctor who really is the gatekeeper for directing a member through the HMO to obtain the care that they need. An HMO member or subscriber goes first to his or her primary care physician, regardless of what their ailment is, and it is the PCP who lays out a medical plan for that individual. Insurance companies were a little slow to catch up to the HMO concept, but they eventually figured out this is the way things are going. And so they came up with a concept called the Preferred Provider Organization, or PPO. So think of the PPO as the commercial insurance industry's response to the HMO. Unlike an HMO, a PPO is not a type of a business entity, but is a type of a program administered by a commercial insurance company. Like an HMO, though, it does include a network of healthcare providers. Unlike an HMO, a PPO does not use a gatekeeper. A PPO member or subscriber is free to go to any healthcare provider in that network. And unlike a traditional HMO, a PPO member may seek care outside the network. And that's a key distinction. By going outside the network, the HMO, the PPO member, really is not limited on where they get their care. However, it's important to understand that there is a penalty associated with going outside of the network. With a typical PPO, care is covered outside the network, but usually at the expense of a deductible and a co-insurance requirement. The next type of managed care provider you want to make sure you understand is the exclusive provider organization, or EPO. Think of the EPO as an extreme form of a PPO. We just made the point that with a preferred provider organization, the member can go outside the network to obtain their care. With an EPO, that is absolutely not permitted. The member must obtain care within that network, and in fact, the EPO network tends to be very restrictive in the doctors, labs, and so forth that are part of it. It's this restriction that allows the premiums for an EPO to be very much less than the typical HMO or PPO premium. And then lastly, you want to make sure you understand the point of service, or POS concept. The POS really is the HMO's response to the PPO. So if you think about it, PPOs were created by the insurance industry to compete with the HMO. PPOs differ from HMOs because they allow people to go outside of network and they do not require a gatekeeper. HMOs saw the popularity of the PPO and said, okay, we've got to come up with something to compete with that. So they came up with a point of service plan, which, tying it all together, is a plan sponsored by an HMO that expands the ability of a member to obtain care outside the network. Like a PPO, a point of service plan does impose a deductible and a co-insurance requirement on care obtained outside the network.
All right, so here's our 4 questions for this lesson. What kinds of healthcare providers contract with the PPO? I would say physicians, hospitals, and clinics, which does not restrict the healthcare coverage that an HMO provides. Which one does not restrict it? Prior arrival of hospital stays and surgery. In an emergency, it may be impossible for a member to get prior approval for a treatment. Requirement to contact the HMO within 1 hour of treatment outside the HMO's service area. Limitations on when, where, and how members receive treatment. Which one is correct? I picked prior arrival of hospital stays and surgeries. Now, I don't know if that's correct. We'll find out in a few minutes. When choosing a healthcare provider from a PPO and managing out-of-pocket expenses, the insured can When choosing a healthcare provider from a PPO and managing out-of-pocket expenses, the insured person, which is going to be us, can use a network provider at a higher out-of-cost pocket. Use a network provider and pay larger deductibles and co-payments. Use a network provider to avoid the usual, customary, and reasonable charges for the area. Use the network provider for the lowest cost, or use a non-network provider for more flexibility. I'm going to pick the third one, to use a network provider to avoid the usual, customary, and reasonable, which is UCR charges for the area. And in trying to avoid more costly care to treat an illness, what kind of care do HMOs emphasize? Care for long-term disability, care for specified diseases, I would say, preventive care, or care for end-stage patients. I picked the care for specified diseases. We'll find out in a minute if this is correct. Nope. I only got 25%. I only got one question right on this. And which kind of healthcare providers contract with a PPO? That would be the physicians, hospitals, and clinics. Which one does not restrict healthcare coverage that an HMO provides as a requirement to contact an HMO within 1 hour of treatment outside the HMO service area? When choosing a healthcare provider from a PPO managing out-of-pocket expenses, use a network provider for the lowest cost, or use a non-network provider for more flexibility. In trying to avoid more costly care to treat an illness, what kind of care do HMOs emphasize? They emphasize preventive care. Okay, so I got that one wrong too. So I hope that helps somebody getting ready to take the test. Stay tuned for the next lesson.